Okay, while the gift nifty is indicating definitely a gap down start and just about defending that 24K mark, it all pins down to oil prices. So let's chat with Jonathan Barratt about where he's seeing oil headed next. Jonathan, hi, good morning. Good to have you on the show. Already seen quite a bit of escalation. We're now nudging 84 on Brent. Where do you sense the range for crude is going to settle in the very near term?
That's a question I'd love to answer. It's a little bit difficult, particularly because we've got a lot of volatility. But one thing I do think is that we've got resistance which stands around that 87. In fact, yesterday I thought we had resistance at 80, but that was pushed through. But I think 87, we spent considerable time there just a couple of weeks ago, and it was support, broke that. So now it's resistance. So if anything, I think there's a little bit more on the top side, but really has to wait and see what the fundamentals do. It's all in the hands of what Iran and the US do.
Jonathan, how do you look at supplies in this thing? Because both the countries, Iran and US, are claiming control of Strait of Hormuz. In the meantime, you have nearly 20 million barrels per day, which is supposed to go out of Strait of Hormuz stuck. Where is the alternate supplies going to come from?
Well, I think the interesting thing is that it's not just oil, it's also gas as well, and that whole energy complex. But there are levers already in there with several pipelines. We know the Arab Emirates one is still open, and that is providing some supply. I think the key question that the market is asking ourselves is that how long will it take for the current inventories that the economies have, and how long it'll take before they start to run lower. Remember, they've already had a hit, right? And are they ready for another hit? And I think that's what's really driving the prices. So whilst the straits remain closed, the market is speculating on how quickly the inventory draw in the economies will actually last. And that, to me, is the key question.
Jonathan, your take on that question itself?
Look, I think it's a lot sooner than it was before. And I think most economies said they had between 30 and 40 days worth of inventories. I don't think they're at those levels. I think we're looking at more like that 20 to 25 days. And that to me is a concern. But also note that we have seen some of the major economies, particularly China, not taking as much out of the market. In fact, they've reduced their impact by about 7 million barrels. So I do think, if anything, there, see what the big macros are doing, but I do think that inventory draw is a lot sooner than we actually think.
If I'm just doing the rough math, Jonathan, based on what you're saying, China has reduced consumption by around 7 million barrels, that's 7%. 20% is what gets taken out because of the Strait of Hormuz. So 13% needs to get plowed back through various sources. Talk to us about the bandwidth we have before panic starts to set in. You said around 20 odd days. Is that the right kind of number?
I think 25 days is a number that we're looking at the moment. When you say has panic set in, well, you've gone from 72 to 85, just in a matter of a couple of trading sessions. So I think that's a question the market is saying, well, look, it's pretty volatile and there is a slight amount of panic unless we can take the accelerator off that panic, and that means Iran and US get together and sort of come up with something meaningful. But at the moment, I think the market is seeing a little bit of panic because that's why we've seen such dramatic price rises just in the last two sessions.
Extremes, Jonathan. Say in the next 20 days, nothing gets resolved, or in the next 3, everything gets resolved. How would oil prices fluctuate in the best case and the worst case scenario, if you can give us a sense?
Yep, sure. I think a deal will be done. I think Iran has the leverage at the moment. It'll be very important as to how the US will respond to the leverage that Iran has. And I think that will happen in sooner rather than later. And I think once that happens, I think nobody wants oil prices to remain high. Okay, so I think that'll happen sooner rather than later. Maybe 3 or 4 days we'll get something out of that. Maybe extend itself to a week and a half. If that is the case, then I think we are still in a range. We've got 70 on the downside, and remember that's where the market went up from when this conflict actually started. So I think that's a good balance area to consider. I do think if we get up through that 90, I don't see it going past 90 because I think there'll be a resolution sooner rather than later. But I do think it is heading that way very quickly.
Okay, fingers crossed on that one. But Jonathan, great speaking with you this morning. Thanks for your insight.